Hey everybody, Preston Brent here with our Trader User Group. This is for the trading week ending May 6th, 2016, first full week in May. What I've got on the screen here is a weekly chart of the cash index, the S&P 500. And I've stepped it back out in time again, and I wanted to review this again. I got a bunch of emails and some questions on this, and it's pretty self-explanatory, and thanks for the compliments on some of the emails you guys are sending in. I like that. I always like to hear those things. From the lows that were made in March of 2009 to the highs made here, 2134.72 in 2015, in the summer of 2015, you can see we've pretty much been on a very strong bullish run here, very strong. Now, this right here, this pattern right here is a typical topping pattern. Generally, you don't just run up and then you go down and then you just do one of these kind of things. You know, you typically will come up, you'll come down, you'll make another attempt at the high. You may touch it, you may go a little bit higher, you'll make another attempt, and there'll be a lot of these false promises with these up moves like this, you know, suckering people in as the big money is moving out, and then you get one of these kind of teardrop shapes where the markets, then all of a sudden the markets just really get aggressively negative. This year, it's a little bit different in that we've got a highly accommodative Fed, very low interest rates, and as I've said many times to our members, there's only two things that drive stock price. Okay, really only two things. One is the fundamentals, which is earnings per share and the earnings of the companies, right? And the other is the interest rates. These two things make up where a stock price is going to go, okay? When you have very low interest rates and you got money in search of yield, a lot of money comes into the stock market. You also have a lot of stock buybacks by corporations, which is what we're seeing right now. In fact, we've seen it for the past few years. They account for anywhere from 20 to almost 30% of the total trading volume with corporate buybacks. It's a lot cheaper for companies that have cash on the balance sheet to take some of their shares off, go into treasury, buy some shares, take them off the market, reduce the float, increase earnings per share, okay? There are a number of different ways that companies can keep their earnings higher, earnings per share. And I know logically you can sit there and say, well, you know, we've got we're in an earnings recession because we've had 3 back-to-back quarters. And when this one finishes, probably 4 back-to-back quarters of declining earnings and sales. That's true. But with very low interest rates, it pushes up that other little known quantity called a PE ratio, and it drives stock prices higher, okay? So we've got a lot of dynamics going on here, and there's a couple of other factors that play. One of them is in the oil market, and for our members, I'll go through some of that this Sunday night. And then the other primary area that's really just creating havoc with a lot of folks is in the currency market. So we've got a number of things at play here, from the interest rates, which drive currencies and drive where money goes, and the earnings. It's kind of like, you know, plowing your field and plowing a field, and you want water to flow down to a certain section of the field, but that level of that field is at a higher elevation. Well, how do you get water to flow to a higher elevation? You dig a ditch and you change the nature of the elevation. That's what the central banks are doing from Japan to China to Europe, over here in the United States. Even though we've stopped buying bonds and we've stopped stimulus, Yellen and the other folks with the central bank has ways to keep the interest rates low, talking the dollar down, as they also fond of doing. So what that's done is it's driven the markets up like this, beyond where a normal PE multiple should be, but it's up here because the interest rates are almost 0%. We did have, excuse me, we did have a 25 basis point rate hike in December. You saw what happened in January. The markets quickly sold off to recalibrate PE ratios and everything else. But then no sooner did that big sell-off happen that Yellen started talking down the dollar, and that affected the yen, that affected the euro, affected the yuan over in China, which was probably their ultimate objective. And that tended to drive up precious metals. It drove up equities, continue to drive up equities, or push them back off the floor that we experienced. We had a nice, great trigger on February the 11th, and also it helped oil as well. So now this is where we sit right now, and the question is, what in the hell is going to happen next? Well, you know, the Feds and the central banks, they are driving a lot of this bus right now, kind of like a drunk behind the wheel. They can see the road, and they can see cars parked on the side of the road. And sometimes they'll swipe a side rear view mirror and a few other things, but they don't really care as long as they kind of stay on the road. But as traders, we don't really care. We just want to know, you know, where's price action going to go in the near term and a little bit further out. Further out, I suspect we're going to go lower. Near term, we could probably go a little bit higher. If you look at the price here, you can see really since 2014, since the end of 2014, okay, into where we are now, we've been in this tight box, okay? And when I say tight, everything's relative. This is a weekly chart, and it goes back to 2009, so it's going back almost 7 years, you know, 6.5 years. But this is where we've been, and you can see in 2015, when 2015 kicked in, right about here, that's where 2015 kicked in. We had a very tight range right there until we had that first big sell-off here in August. Big, huge sell-off, a flash crash. And then, you know, a little bit of a head fake, and then we came back up, but we couldn't make a new high, and we sold off again. We came down, and all we did was really test these lows. Came down just slightly above my 0.236 pullback. Now, some people use other fib nodes on an interim before you get to the official fib node of 0.382. Some use 0.27. I love 0.236 because in a very strong bullish or bearish market, prices seem to come and just genuflect right around the 0.236 area, okay? But what I'm seeing now is if I clear the screen and then just zoom in a little bit, you're going to see here, I'll increase the size. You can see here that the markets are really kind of doing this slow roll, right? I mean, I didn't draw it exactly straight, but you can see, you get the idea, okay? And then we've got this support point right there. I can extend it over like that. There was a support point right there that we're sitting on right now. There's another support point right there that held us up there. Again, this is a weekly chart, so this is over a couple of month period. Held us up right there, provided a little bit of support right there. So we've got a couple of checkpoints that I'm going to be watching in the coming months, May and June, because as I said, May is traditionally the sell in May and go away thesis, where generally from May to October, the markets are traditionally weak, and then going into October, November, December, you get a very strong thrust into the end of the year. So we're coming up to a traditionally weak time, number one. Number two, the markets look like they want to go a little bit lower. So that's why, and volatility has just, you know, it's moved into zone 2, what I call zone 2, and I'll show you that chart in a minute. So this is kind of where we're sitting right now, okay? Let me throw a couple of other indicators on the screen here. Again, this is the S&P 500 SPX cash index. So I've got this one channel on here that you can see, this line and that line right there. We broke it and we came right back up above it. We're just slightly above it right now. And then you can see this wider channel here that runs that length right there like that. So I'm going to be watching these very closely. For our members, Sunday night, I'll go into this in some more detail, but you can see where we're sitting. Now, the S&P and the Dow are the only two cash indexes that are above the 50 EMA, and above the opening price of 2016. As I stretch this out so that you can really get a close look at this, and let me put it on the daily, so we'll zoom in just a little bit on the cash index here. You're going to see that we held up right here. The opening price of 2016 is this blue dashed line, 2038.20. We came down and we touched it and we held up, all right? And we're slightly above the 50 EMA, but all major indexes closed down for the week. And you can see since April 20th, we've been in a very slow downtrend, okay? Very slow downtrend. If I were to zoom in to a 2-hour chart, which, as you guys know, I love a 2-hour chart. It really allows you, if you count the bars and you count the days from a swing position, it's great for weekly options. But you can see here on this 2-hour chart, it is a classic downtrend starting from April 20th high, pivot low, lower pivot high, lower pivot low, lower pivot high, lower pivot low. That is a classic trend, folks, and I'm just connecting these lines here. That's all I'm doing, like that, and you know, your eyes quickly tell you where we're sitting here, okay? And that's kind of what we're looking at right now. So and you can see the opening price of 2016 right here. So we're slightly above it. But that would suggest that the pivot high would take us somewhere up in this area here around 2070, and then, you know, we come back down again, right? We don't take out that prior pivot high. If we take out this prior pivot high here, then, you know, we can run a little bit, okay? I mean, we can just, we can run. But I'm not sure if that's going to happen. If we come back to the daily chart here for a second, and let me just adjust my 2016 high price right there. So now you can see the 2016 high was up here around 2111. But you can see this downward move here. Here is the 50 EMA, and here's the 200 EMA providing support, and we're in this shaded zone that shows a little bit of support off the screen here. So we got a lot of support under here. Also on this pattern, it's showing a 3-4, possible 5 Elliott wave pattern. And you typically, let me just clean this screen up for you. I'll put another fib node on here and I'll show you if I was going to, because this fib node here is off of a weekly chart going back to 2009. But if I do a prior pivot low, you know, let's just pick this pivot low right here on February the 11th, and let's just come right up here like that. And you can see where this 236 area is holding up very nicely. I mean, it held us there for over a week and a half, provided support there, a little bit of resistance there. Now it's providing support there. Should it break, we'll test the 200 EMA very quickly at 2028, and then we'll come down to the next natural fib node around 1996. Okay, if we break the 200 EMA, then that's going to put us, or if we break this node right here, right below it is the opening price for 2016. It's kind of like a psychological number. If it goes down, then, you know, the rat brain business journal of the day, the National Enquirer, will pick it up, and then everybody will just start panic selling. We'll look to find some kind of bottom right here, give us a 4-leg, one of these kind of things, and then move back up, and then give us a final thrust before we give it up more a little bit later on this summer. That's kind of what it's looking like right now. I think this initial push down is probably going to be met with some buying into the middle of May, possibly. Remember, we got strong breadth in the market, but we'll check the breadth out in our Sunday night session as far as percent of stocks that are over their 50 EMA, percent of stocks over their 200 EMA. This is what we're looking at right now, folks, on the SPX, the cash index, okay? So we've been in this downward track since April 20th. We've been talking about it, and I've been having our members pick up some puts, just adjust their mindset to a little bit more downward action here. Any up move right now should be sold. If we look at the other index that's doing good, is the Dow. If we look at the Dow here, you can see also we're above the 2016 open price. We're also above the 50 EMA and the 200 EMA. So we're, you know, these are the only two indexes, the Dow and the S&P, that we're in the green year to date right now. Okay, the other two indexes were in the red. I'll show you that in a minute. But again, we got a signal. Our official signal was on the 21st of April. The high was on the 20th of April. We got a signal on the 21st to start picking up some shorts. or long puts, depending on your proclivity. And you can see this move here, very similar to what we're seeing in the S&P 500. If we look at the Russell, which is small cap, you're going to see, and I'll go to the rut. You're going to see here in the Russell, we're below the 2016 open price of 1134. Okay, and we're sitting just above the 50 EMA, but we're below the 200 EMA. So the 50 EMA is below the 200 EMA, and we're in the red year to date. So the Russell, the small cap, has just been a laggard off of these February the 11th lows. Okay, really doing poorly. We need to see this catch up. If this gives it up, it's going to drag the rest of the market down. The other one that was the surprise, which was very strong and now has given up all the goods over the past 90 days with some bad tech earnings reports, is NASDAQ. Here's the cash index, NASDAQ composite. You can see here, again, the high point was right around April 20th. We rolled over. You can see this blue dashed line. It's the opening price of 2016. We're well below that. The 50 is below the 200, and the price is below both of them. Folks, that's negative. That's bearish. Unless we can catch this downward move here, then we're going to get, it's going to drag down both the SPX and the Dow. Right now, I think this downward move is probably going to, I guess, slow down a little bit, right? And catch its wind and then probably move up, give us a little bit of a higher price, and then give it up a little bit more. So again, we've been bearish since the third week in April, and you guys should be too. Now, next week, this week was a down week. Next week, we're going to be into some chop, I believe. We're wrapping up our earnings. And more detail for our members Sunday night, but we're wrapping up the Q1 earnings. We had numbers come out this Friday. If I come into the futures market, and I'll just show you the reaction here on the S&P 500 futures, and let me come into the 15-minute chart, and you can see here on the reaction here, and let me come down to the 5-minute chart. I'll just show you, and this is where some people just get suckered in all the time. Okay. You can see the initial reaction at 8:30 this morning. Right there was the price. The market's, sold off for the first 30 minutes of the 8:30 move, all the way down to about 9 o'clock in the morning from the numbers, and then all of a sudden the markets realize, hey, bad jobs data means the Feds are going to hold off on an interest rate hike, so we're going to run back up. So we had this nice run up like this. We quickly sold off again. All right. We found our support at a fib node. And then we just kind of buyers were buying these dips. Every dip that came down, we were just buying, and we finished up here in this 3, 4, 5 pattern, and we closed near the highs. And then in the aftermarket going into the weekend, we've got a divergence setting up, so we can expect a little bit of a weakness Sunday night, possibly selling off a little bit or staying flat until we get into Monday morning. But that was the move, and it faked some people out. But the reason why we went higher is because we're not in a normal market. We're still in kind of a bad news is good news scenario, meaning bad news on U.S. economic data means the Feds are going to still come in with a light touch and not have a proclivity to raise rates sooner. So that's kind of where we're sitting on the S&P 500. Okay, so that's where we're looking. If we look at the volatility came in this Friday, even though the week finished down a little bit and today was up just a little bit. Volatility came in. You can see we're still in. We actually moved back down to zone. Let me just move these over a little bit. But we actually moved down into zone 1 again. Okay. And you can see these zones on here, and these zones we use for different strategies with options. When you're up in the higher zones, higher to zone 2, 3, 4, these are great times to be selling option premium. When we get back down into zone 1, we just have to be careful. And so we're down in this area here where volatility was taken out of the markets. The markets don't seem to be worried right now. The markets are signaling that they just do not believe the Fed's are going to hike the rates in June. And there's a very low probability, under 40%, that they're going to hike the rates this year at all. especially with political silly season upon us here in the U.S. with the presidential election. So this is kind of where we're sitting right now. Folks, if you're not a member of our group, I highly encourage you to come in. We got a lot of folks that come in from all over the planet. We talk about all the various commodities, from energy to agriculture to precious metals to softs, meats, um, um, and interest rates and the bonds. We look at the equities, and we're having a good kick for the year. So if you're not a member, I've got a special offer. You might want to take advantage of it. I highly encourage you to. Um, and for those of you that are members, I will see you Sunday night. We'll go through the markets and we'll take a look at what this week is starting to shape up to be. 8 p.m. New York City time. We're going to have our weekly market watch. So the markets would have been open for about an hour and a half or so, and we'll just kind of see how things are opening in China, and then we'll, just go from there. All right, everybody, have a great Mother's Day weekend for all of our mothers out there. I wish you a great weekend with family and friends and members. I will see you this Sunday night. Have a good one, everybody. Take care.